So what is the Apex Alchemy system? The Alchemy system is a system that we use for trend trading as well as scalping, and specifically designed to show us where to get good entries, but also to protect our profits when the market moves against us, but also allow us some room to let our profits run. Many of you have seen postings and charts in the forum, on Facebook, online of some great trades using Alchemy. You know, getting over 100 points on oil here and 66 points on oil here, catching these big moves, but getting out when it goes against us to protect some profits, when to get back in, when to protect our profits, when to let them run. You've seen it work great with FX. We have people that are trading Alchemy on futures and on FX. We found it particularly performing very well on FX pairs. And as you see here, you've probably seen some of these screenshots as well, just in one night, catching different moves on some of the different yen pairs for 409 pips this particular evening. On a mini lot, that would have been 409 bucks. On a standard lot, 4,090 bucks. Nadex spread, 409 bucks. Some great moves there. That's what the Alchemy system is. For example, here's a chart of pound yen. Okay, now don't let this chart overwhelm you. You're wondering, what are all these indicators on this chart? What is this? I'm going to walk through and break this chart down for you to explain to you what each one of these indicators is and what their function is. I'm not going to spend a ton of time getting into details with you about all the programming behind them and bore you with all that. Just going to give you a brief understanding of what each one is. That way you'll understand what it is we're looking for an entry and exit. Now, you will not have to build this chart yourself. You will not have to add each indicator on and understand the settings of each. Okay, we already have a pre-made template for you that will pull this chart right up for you, whatever instrument you choose. For example, here is pound yen, showing an entry here, catching this big trend up here catching the downtrend, but getting out when the market's moving against us to protect some profits. How do we know when to get back in? I'm going to talk to you about that, how to get back in and ride the market back down, but to pop out before it goes too far against us. I'm going to show you a few things there, how to catch those moves. Okay, so let's talk a little bit about the actual chart itself. I'm going to break down each individual indicator on the chart for you just a little bit here so you understand it, and in the end we'll put it all together. Okay, and in the next video, once you understand the chart and what you're looking at, in the next section we're going to talk about entries and exit rules. So first thing we're looking at here, continuum bars. What are continuum bars? Some people will say, are these minute bars? Are these 5-minute bars, 10-minute bar? What are these? Well, these are tick based bars. Okay, and if you look right here, you'll see as an example 8 and 10 tick 5-minute bars. Well, what does that mean? Well, basically, time-based bars can actually have some flaws. One of the bad things about time-based bars is, let's say for example you're using a 5-minute chart. Well, every 5 minutes there's going to be a new bar automatically plotted on your chart, no matter what's happening. Even if the market's not moving, just because a little time has passed and just because the earth has rotated a few degrees on its axis, you're going to get another bar. Okay, and that doesn't always tell you something in and of itself, of just having another bar because some time has passed. The market may actually be really at a standstill, but it can be deceiving because there's a new bar. And is it really in a downtrend, or is it just every 5 minutes just move down one tick or up a tick here and there? So these are tick based bars, but combined with time based. What do I mean by that? What does 8/10 tick mean? Well, what it means, for example, this bar right here closed up. Okay, to make a new up close bar, the market has to move up 8 ticks to make a new up close bar. Or that's what this is, 8 ticks. Market have to move up 8 ticks to make a new up close bar. Or the market would have to move down 10 ticks from where this bar opened, down 10 ticks to make a new short bar. Okay, so That's what the 8 or 10 tick mean. These are tick-based bars. You can see the actual movement of the market. It's market going up, market going down. So it'd have to move up 8 ticks after this bar closed. When this new bar forms, it'd have to go up 8 ticks to make a new bar, or a new green bar, or down 10 ticks to make a new red down closed bar. Or if within 5 minutes it does not move up 8 ticks or down 10 ticks, it will make a new bar. Okay, so it takes into account both. It gives you a better understanding of what the market's really doing. Okay, now these can be changed. For example, with futures on the Alchemy system, we use 15 minutes. On Forex, we use 60 minutes. So if the market has not moved up to make a new bar at the top of the hour on a 60-minute bar, a new bar will automatically be plotted. So you kind of get a good idea of what the market is doing, but also put some time into favor. For example, if you did have 5-minute bars here, notice how right here on 12:40 there was a new bar made, or right here 13:15, basically on the 5 of every hour, meaning 12:05, 12:10, 12:20, 12:25, 12:30, 12:35, and so on. If the market has not moved up 8 ticks to make a new up close bar, or down 10 ticks in this example to make a new down close bar, on the 5 of every 5 minutes, it will automatically plot another bar. Just kind of the best of both worlds there, combining tick-based bars and time-based bars. Okay, now one of the other indicators that we use here, it's an apex indicator, is called the bar trend chop filter. Okay, this is the same continuum bars we were looking at a minute ago, but this paints the bars the color of the trend, okay, as opposed to the color of the bar close. Well, what does that mean? Well, look right here, for example, we've got green bars, and we're all familiar with green bars being up close bars, but this is a down close bar. It's still green. Okay, how could a down close bar be green? Well, the bar trend chop filter, it takes into account choppy areas. That way you're not influenced just by a green or red bar determining direction. It filters out the chop. Okay, and there can be orange bars as well, okay, which are considered to be choppy bars. Okay, so it's not until the bar turns green or a bar turns red, okay, that is considered to be part of a up or down trend overall. Okay, with the back end programming of this indicator, that's how it works. When there is a yellow or orange bar, that's considered a chop bar. Okay, it has not analyzed that we're actually out of chop yet. Yes, this bar closed down. Yes, this one closed down. That one closed up. This one was kind of up, down, not quite out of chop yet, according to the way this calculates the chop. Then these next bars, we're out of chop. It turns red, considering that we're out of the chop area and looking like we're in a downward type trend, and as you see, we are. Okay, now this is a chop filter. This is not a trend indicator. This is not just in and of itself a trend confirmation, okay, and not to be used on its own. It's to be used in conjunction with other indicators. And this is looking at time of bars to close, previous highs and lows in the same direction. It's calculating a lot of different things. Okay, but that's the bar trend chop filter. It's the color of the bars. Now we also have the trend bands indicator. Again, this indicator is looking at several different things. For example, this may be looking at the last X number of bars directionally and so on. Okay, it's trend bands and it fills in the color. As you see here, this is a red band color, green, red, green, red, green. As you'll see, it's sometimes you might have different color of bar trend chop in there. Like for example here, see, you got a red bar, green bar, red bar, green, but this is red. So it's looking at different things. The trend bands are looking at different things than the chop filter. But a very easy indicator to understand. Red and green, okay? Or green and red. Green is up, red is down. Very, very simple. Another indicator is called the trend flip. This is a direction confirmation indicator. And again, it's not a standalone indicator. It's to be used in conjunction with others, okay? And again, red, down, green is up. Red is down, green is up. Very easy indicator. Like I said, I'm not going to bore you with exactly how it's figured in the background and calculations and you know, all the programming behind it. But as you see here, it's going to take into account different things as well compared to the other indicators that we've looked at. Our MVP indicator, it plots similar to how a SAR will plot, but it takes other factors into account as well. It doesn't flip as easy. It plots differently. It'll actually go flat during potential choppy or reversal times. Okay, you can kind of see an idea of that here. As it's coming down, market's going down. As it goes flat, get into a little more chop, and then it reverses up. Same here, kind of coming down, chop. Is it going to chop when it goes flat? Is it going to go up? Different ways we use this, but these triangles right here are what we call the MVP predictors. Okay. We also have another indicator. It's called the Trendar Momentum Indicator. Very simple indicator. It's down here at the bottom. Okay. Now, don't worry about anything else with this indicator except notice this zero line right here. Okay. And in our new template, anything that's above, okay, the zero line is basically this line right here. You've either got these bars above zero or below zero. Above zero or below zero. Okay, does that make sense? This line is a flat line. You've either got these plotting below or above it. In our new template that has Alchemy on it, anything below is red, anything above is green, just to keep it simple. Don't worry about all these different colors. All right, everything on top be green, everything on bottom be red. Simple indicator. Okay, it's either above or below the zero line. That's it. This is also a chop indicator. Okay, but it's a little bit quicker determination of chop compared to the bar color indicators. Okay, and I'll show you how we use that. For example, let's say that this bar right here is a red colored bar on the bar trend chop filter. Remember the bar trend chop filter that colors the bars? This is a red bar, but the Trendar indicator is actually above the zero line. Okay, and therefore the Trendar indicator will override the bar color if need be. And I'll show you exactly what I mean by that. Okay, for example here, this is a green bar. Remember how the bar trend chop filter looks at chop. It can, just because something may be a down closed bar, it can still be green. Might be an up closed bar, it can still be red. Okay, it determines when we're getting out of chop. Well, the Trendar momentum is the same thing. It's a chop filter, but it's a little bit shorter term chop filter. So we've got longer term chop filter, shorter term chop filters. So when it comes to the entry rules in the next video we'll talk about, we may have a green bar that may not, or we may have a red bar, but if the Trendar is above zero, that can override that and be okay for a long trade, even though this may be an opposing color. And that'll make a little more sense here in a moment. But simple, it's either, is it below the flat line or above the flat line, and that's it. Now, one other indicator, okay, is actually, I'm sorry, it says Trendar momentum here. This is actually the expected volume indicator. Okay, sorry about the wrong title there, but it's called the expected volume indicator. It's down here. Okay, pretty easy to understand. See this yellow line? Okay, that yellow line is the expected volume level. Okay, historically, for this day of the week, for this hour of the day, and for this few minutes of the hour, what is historically the normal average volume for that time frame? And that yellow line marks where volume on average is at that particular time of day. You see the timestamps here. Okay, so that yellow line is where where volume is expected on average historically to reach. These blue bars show what actual volume is right now. So for example, you can see here in this time frame, volume was only expected to be here at this yellow line, but the actual current volume, actual volume, was blowing through that line, which means what? Higher than expected volume. Okay, we do have expected volume, or higher than expected volume. Right here, see, like right here where this blue bar went basically right to that line, that was expected volume. It did what it was expected to do. Got to the volume level that historically happens at this time. Okay, same here, same here. Right here where you see some space between the yellow expected line and the actual means that volume was lower than expected. Okay, and sometimes what you'll see is, look what happens right here when volume is right where it's expected, or maybe even lower than expected. Market kind of chops around. What happens is volume starts to build, especially as it starts to stair step higher and higher than expectations. Get a little bit of movement there sometimes, right? Okay, or as volume again starts to build and getting a little higher, kind of a movement, kind of a trend. Okay, so that's the expected volume indicator. So when we combine them all together, we've got all kind of indicators. We've got short-term and short-term trend indicators, longer-term trends, things that look at high and lows, crossing indicators, indicators that look a certain number of bars back. We've got time-based bars that are also combined with tick-based bars. We've got a couple different chop filters, shorter-term, longer-term, and we've got volume. Okay, so when we put them all together on a chart, here's what we have. Okay, now we also have what's called deviation levels. Notice these deviation levels. See right here, settlement, and then notice right here, half a 0.5 deviation, 0.7, or -1 deviation. If we were to look up further on this chart, we will see +5, +7, +1, and so on. Okay, those are called deviation levels. Deviations are the expected move of the market, and it's based on IV, the implied volatility of options and option pricing. It's not historical deviation. It's not saying, hey, historically here's what the market moves. Okay, it's not looking back, it's looking forward. It's the price of it's the implied volatility of options. It's what does the market say that the market's going to do? How far does the market expect itself to move based on the price of options? It's kind of traders, people putting money, where their mouth is. And it's based on, like I said, the IV of options. In a nutshell, the market, 70% of days, the market will move 1 deviation. Okay. If the market does move 1 deviation, there's only a 33% chance that it will go to 2 deviations. And if it gets to 2 deviations, only like a 0.3 chance of it going to 3 deviations. Just kind of gives you an expected move of the market. Okay, and a lot of times what you'll see around these areas, let me focus the chart here, these are very high, these can be kind of magnet levels as well. A lot of times what you'll see as the market moves down to it, right here for example, market was at settlement, okay, comes down to this 0.5 deviation, kind of bounces off of it, comes back up to settlement, kind of comes back down. Look what happens right after it passes 0.7 deviation, kind of bounces up, bounces down, bounces up, bounces down, then it comes on down. And you can see a lot of times where the market will come right down to one of these deviation levels and bounce. Now, it can go through one of these deviation levels pretty smoothly, especially if there's building volume or higher than expected volume. But it's a great place to see of where the market could be going, where could the market be going to next. And there are also levels for us to look at where we can expect at times, especially lower volume times, of a bounce, or of the market kind of chopping there for a little bit and then figuring out, is it going to go back up, is it going to keep going down? So those are deviation levels. Okay, so once we put all of the indicators together on the chart, here's what we're looking at. Okay, so we've got our bars, our continuum bars. What I'm showing you here is a Forex chart, pound yen. We use 312, which means a bar, once a down close bar closes, for example, the market has to go down 3 pips in order to make another down close bar. Okay, or it's got to go up 12 ticks to make a new up close bar, or vice versa. And if a new bar is not made within 60 minutes, if there's not another 3 tick up or 12 tick down, for example, it will plot a new bar. So we have our continuum bars. Okay, you also see that we have the bar trend chop filter on here. Notice we've got some yellow bars. Okay, notice we have a down close green bar. We're used to having down close red bars, right? So we have the continuum bars, we have the bar trend chop filter. Okay, notice the bands. See the color of the bands here? See the green shade? Okay, see the red shade? See the green shade? All right, remember the trend bands. Remember we talked about the trend bands, red or green, right? We also have the trend flip. See that? Trend flip green right here, trend flip red. Okay. We have our MVP predictors. Remember the triangles? Okay, there's our MVP predictors. We have our deviation levels that we've talked about. Down here, we have our trend arc momentum. Remember, it's either above the 0 line or below. Remember, I told you, don't worry about all those different colors. Here in the template, it's either green or red. Okay, is it above or below the 0 line? We have green or do we have red? And down here, we have our expected volume indicator. Okay. Now, one other indicator to show you is what's called our volatile trend line. Let me just show it to you here, kind of standalone by itself. A lot of you are familiar with the volatile trend line. It's this right here that you see going through the bars. It's either red or green, okay? It's not a smooth straight line. It's not a smooth, oscillating line. It's volatile. It can be up or down. It's simply a trend indicator, all right? It's red or green, volatile trend line. Very, very easy indicator to see and to understand. Green or red, buy or sell, okay? Or up or down, I should say. Okay, so when we look at everything all together here, okay, on the chart, we put everything all together, you see the volatile trend line right here. You see it? We've got it a little darker on here and a little bolder, so it's real easy to see. It's the volatile trend line. Okay, green, red, green, red. All right, so that's the chart as a whole. So now you at least know what you're looking at. This chart doesn't seem so messy or overwhelming to you, wondering what are all these things. Okay, we've got our bars, we've got our bar trend chop filters, we've got our volatile trend line. Okay, we've got the trend flip, we've got the MVP triangle predictors. Okay, we have the expected volume, and we have the trend arc, okay, as well as the red or green trend bands. Okay, so now looking at this chart overall, you at least know what you're looking at here and which one of these are. So like I said, you don't have to build this chart and add each and every indicator and no settings. Okay, once you've installed NinjaTrader and you have the Apex toolkit, it's very simple. You'll just go up here to File and click New, go to New Chart. Let's just say, for example, that you want to trade the pound dollar. Okay, right here under Type, here's where you select the different bars. Okay, and you want to select Apex Continuum bars. And since this is a Forex pair, what we use is 3, 12, and 60. Okay, so you've selected pound dollar, you've selected your bar type. If you were trading, let's say, a futures contract like NQ for the NASDAQ or YM for the Dow, had you selected that instead, okay, what we would use there is 3, 12, 15. okay, on futures. So on Forex, 312 and 60. On futures, 312 and 15. Now you can play with these and see if you come up with, some settings that you think work really good on a particular instrument that you trade, and feel free to share your results with those with us. Again, we're always looking to improve. We found that these in general are good for FX in general, but there might be a certain FX pair that you trade that you have found different settings work great on. So pound dollar, select a pound dollar. We're doing 3, 12, and 60. Now all you got to do is come down here to chart templates and select Apex Alchemy and hit OK. Like I said, you don't have to load all these different indicators and figure out colors and size and settings. All you got to do is choose your instrument, select the template, and everything pops up right there for you exactly how you need it. You don't need to be going in and changing settings or anything. It's all done and very, very easy to access. So that's the indicators, that's the chart, and that's how you get access to the chart. All right, if you don't have NinjaTrader already, there's a step-by-step training course of how to get NinjaTrader and data feeds, and then you will of course need a trial or paid membership to Apex to get the toolkit with this template and indicators. So in the next video, we're going to talk about how to use this chart and talk about entry and exit rules.